Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we talking about? Well, I have a lot to talk about, so I hope you ate your Wheaties today. I have a lot to say about the methodology and action. We've been having a lot going on as of late, as you can imagine. I got a question on the TFM 10% system, using that in markets other than the indices, the S&P 500 to be specific. Also, I want to talk about buying stuff that goes up. And the crypto market is hot again. I guess the question is, for how long? And I put on a bunch of positions last Saturday, a few since then, maybe one on Sunday. And we're going to have kind of in wait and see mode. If we have time, we'll hop into the live charts on that. I want to do a brief market update based on where we are now and some things for you to watch for in the future, especially while the market is a little bit iffy. You need to reach me, DaveLandry.com/contact. I do take requests, so if there's something you want me to cover, it makes my job a lot easier coming into the week knowing what I'm going to talk about. And I do a weekly webinar in addition to this one, a little bit more open format, I should say, so I can cover a lot more things in a lot more detail. In fact, a lot of things we're going to cover today, we'll cover it in prior webinars, especially in the weekly charts. Go to DaveLandry.com/webinar for more on that. Register even if the link is old. And if you want the slides from this show, all the other shows, and all my books in PDF format, and a bunch of stuff to keep you busy for a long, long time. Market timing course, limited access to the members area, just a plethora of things. Go to DaveLandry.com/StockCharts and put your information in. And that'll also put you on my newsletter. All right, let's talk about the mystery charts and the methodology in action. Here's our mystery chart for the week. Was in a really, really nice uptrend. As you can see, it's pulled back. It came really, really close to triggering, but came back in a little bit. So nice uptrend. This is a relatively new issue. I would consider it still an IPO. So let's just see how things shake out, and I'll follow up on it in upcoming presentations. Here's a stock we recently stopped out of. We entered it here. Our stop was down here. It rallied up and hit the initial profit target. At that point, we're taking half of the position off, and our stop goes to break even. And then we went a little bit past break even because the market rallied a little bit, the stock that is, and then we stopped out recently. So if we take a look at the spreadsheet, on the first loaf, or the first half, as I often say, we're looking for a 1% gain, and the account is based on a 100K hypothetical account. Although I do take these actual trades, so it actually is real trades, but for educational purposes only, and for all the other reasons, we have to consider it a hypothetical account. And this is what I call the better than a poke in the eye trade. So on 100K, you made 1% or $1,000, and then you picked up a little bit on the remainder, $241. Now, as you'll see in a minute, this is not the ultimate goal. The ultimate goal is to capture a 500% gain. I'll show you one of those. I wish I had many more than one, but I'll show you one that stopped out not too long ago. But it keeps you in the game if you're able to make a little and scratch out, and at worst, lose a little on a trade. If you want to see, I would say probably every mystery chart I've mentioned so far, and all the examples that I talk about in this presentation, with the exception of IPOs, you might have to find some of those in the Facebook group. But pretty much everything else comes directly from my core trading service. Go to DaveLandry.com/archives for more on that. Now, here's a prior mystery chart I showed about a week or so ago. Nice little uptrend, nice little pullback. But let's take a look at what happened. Well, first of all, the buy was at 45, okay? And we'll take a look at what happened, and the stock imploded, as you can see. So no capital was put into harm's way. Now, I know I show these no entries, or no triggers, however you want to look at it, trades quite often, but you'd be surprised at how many people front run setups. Now, on occasion, you can front run a setup. In other words, get in a little bit early, But you don't want to do that unless we're in a rip-roaring momentum market. And as you'll see in just a few seconds, in case you haven't been around for the last couple of weeks, been on vacation or wherever, we're not in a rip-roaring momentum market right now. So in a case like this, make sure you're waiting for a trigger, no trade, and no capital was put into harm's way. Now, one thing you're probably wondering right now is, should you quit when the market gets iffy? And my answer to that is, there's always a reason to exit a market and rarely a reason to stay. And by market, I mean crypto or stocks or commodities or Forex or whatever you're trading at the moment. You could always make a case to get out. What you have to realize is, if you're trend trading, especially with my hybrid money and position management that we talked a little about last week, you have to occasionally capture a big winner, and that's where the real money is. And in the meantime, you just kind of chip away at that. If you quit at the first signs of adversity, you're never going to catch those occasional big winners. And that's what makes it really, really hard for people coming into trading and trend trading even more specifically. And by the way, the only way to ever make money trading is to what? Capture a trend. You might want to write that down. I did a presentation a few weeks back. Somebody came into my service. We had a bunch of winners. They came in. We had a few losers. Okay? And they left, and then some of the positions began to take off, and then right after that, I would have had a few big winners. And I'd be willing to bet, at worst, he'd be probably scratching out by now, because everything, for the most part, came back, and we had a few other big winners. He also came in right after we stopped out of a 500% gain, and we'll talk about that right now. So I went back in time, and you could see that these are all the trades where we're just kind of chipping away at it. We'll make 1,000, make 0, make 1,000, make 0. That's the second loaf of the trade. And the goal, obviously, is on that second loaf to do a lot better than scratch out, but sometimes that's all the market gives you. So that's what you have to take. And you can see we have a losing trade there. And this one here, we made 2,333 on the second loaf. So that's pretty good. That's a little bit better than 0. So we're starting to get there. You add those two numbers together, that's 3.3% on one position. So that's much better than poking 9. That'll get you a little further down the line towards profitability. And then, of course, we go back to chipping away at it. You can see here, bam, 500% gain on one. Now, these aren't exact in chronological order, except that this is how the positions ended, okay? So every time a position stopped out, it's tracked as a closed out position in this spreadsheet. It's also tracked mechanically. I will use a little bit of discretion on my own. But as you can see, if you're just looking at the closed trades leading up to this 500% gain, make a little, lose a little, make a little, lose a little, make a little, lose a little, and then bam, you knock it out the park. And that's the secret to trading. So we add these numbers together. That's over $23,000. And that's per 100K. So to keep all the math easy, we keep it 100K again. That's 23% move. And that's on the portfolio. So that's a really good move. And all you need is 1 or 2 of those a year. And that's going to make your year. Now, in my stock chart show going back 2 weeks, and I'm going to update that here over the next several weeks, and I'm also going to update it in the weekend charts, which is, again, davelandry.com/webinar. The open portfolio, counting the closed swing trades, was up 28,594. And we got close to being whole from that, and we're not quite there yet, though. And I'll follow up again in upcoming presentations. Now, as I said earlier, there's always a reason to exit the market and rarely a reason to stay. So we've been talking about this one quite a bit. ARLP triggered way back in January. We took half profits. And you can see along the way, it's gone sideways a lot. It's pulled back a lot. And there were plenty of reasons to get out of this stock. And we trailed the stop higher. So we're free rolling, so to speak. And just recently, of course, the market began to slide. Now, when I say market, in this case, I'm talking about the overall market. And let's take a look at what this stock did? Well, it initially dipped with the market, but then it turned around and went straight back up. Will they always do this? No. Am I interviewing myself? Yes. So here's a trade before. We were up 47.10, and then here's a trade as of last night. I think it was up a little bit this morning, if memory serves. So we add all that up, or subtracted, I should say, in this case, and there's a $2,300 and change difference, or 2.3%. It's not 23%. I wish it was 23% like the other one. But it's 2.3%. So we had a really nice move in this one, and maybe, just maybe, this one might be the one that saves us. And that's why we don't get out of all of our trades every time the market gets iffy. Now, this is not to say throw caution to the wind and don't honor your stops. Do honor your stops. And we've gotten knocked out a few in that portfolio. And again, I'll follow up in upcoming weeks. But be willing to stick with the positions until the market, in this case, the individual stocks, proves you otherwise. Now, as I said last week, a week before in the weekly chart, that's cheating. We had DATs in the portfolio, but initially I did have it back here as a buy B+1. We talked about that one on Facebook. Sets up again as an IPO pullback. And we got into it here, hit the IPT within a couple of days, but unfortunately came right back in and stopped us out. So remember, when you hit the initial profit target on your remainder of the shares, let's say you're long 1,000 shares, and you hit that IPT, you sell 500 shares, but you immediately then bring your stop up to break even intraday. We normally don't change the stops intraday except the day that you hit the initial profit target. So technically it did stop out. I did hang on because it really didn't take out that stop by much. I also had some shares from a much lower level where I was trailing a much looser stop. And it just really blasted higher, pretty much tripling from there. Now, truth be told, I did get a little greedy here. I did stop out of this one this morning, just FYI. But even stopping out way up here at 13 or 12 or whatever the case may be, down from 8, that's another 50% gain. So I can't really count this one other than if you use a little bit of discretion on the trade by giving it a little bit of wiggle room on that day it hit the IPT because it's such a volatile stock. Now, if you have time, go in and study discretion on my website. It's a lot of, we talk a lot about that in the Q&A section. I also talk a lot about it in the Facebook group. Now, I did get a question this week, and I love questions. Again, it makes my life a lot easier, and it also helps to flesh things out, helps me develop my system even further, and helps me know whether or not I'm explaining things properly. I would like to use your 10% market timing system with percent from closing high indicator also, but in all of your videos, I think that a 10% buy line will not be as effective with a higher volatility stock. Yes, so the point I often make is the TFM 10% system was only intended for the S&P 500. That's the designer's intent, so to speak. And it might work in other markets fairly well, but you would really have to adjust for the volatility. Now, I don't use it in other markets. I tend to eyeball where a stop should go. I look at historical volatility, which is called Landry volatility in the ACP plugin. By the way, we'll talk about the ACP plugin in a few minutes. Easy for me to say. But if you like this video, you get the plugin for free. Absolutely nothing. And change it to 30%. Or you're talking about changing percent from closing high. So the confusion comes from the fact that something I wasn't aware of. This is the 10% buy line in here, okay? And it's called Landry percent of close. So this line here, and I'm going to show you the signals for the TFM system, is 10% below the 50-week closing high, which just so happens to be right there. So this line is 10% below that. If we close below that line, which I often call the buy line, and below the 50-week simple moving average, this is a weekly chart, as you can see, then you exit the market. And then you get back in on 2 weeks of Landry light and 2 closes above, 2 weeks of Landry light and a close above the buy line. So actually, your buy would have been right back here. This was the pandemic slide. And the whole thing turned out to a whipsaw, turned out to be a whipsaw. But like I said last week, there was about a 30% drop from the signal. So that was a legitimate signal. Anyway, when I pulled it up, I didn't realize that this variable is fixed in here. So you can only change the time periods, but it's always going to be 10% away from the high. So I will talk to the programmers and see if there's a way to add that in the list. I know they have a lot of things they're working on, so it may be a little while. So just be patient with me on that one. This indicator, by the way, does not need a parameter other than this little line here, which just shows you. This is just a reference line because you want to know how far away it is from the highest closing high. Okay, so you can set that for 50 if you're looking at 50 up here, 50 periods, and that's what the TFM 10% system does. So unfortunately, it's not going to work in other markets where you have to adjust the indicator because we don't have that variable there. And hopefully, yet is the key word. Now, as I said ad nauseum, when people meet me and they're like, what do you do? And I tell them, like, oh, okay, whatever. And then if they get to know me a little bit better, they're like, wait a minute, you don't leave the house very much. You're always running around in T-shirts and shorts, no shoes on, and occasionally you're wearing a jacket with shorts on. And what exactly do you do? And it's so funny. They all tend to ask the same thing. And like one guy's been knowing me for like probably 7 years, maybe even longer, maybe 10 years, just a couple of days ago at the gym. He's like, what exactly do you do? And I was like, well, I buy things that go up and I sell things that go down. Now, you can't always do that exactly, except in a few cases, such as IPOs and in rip-roaring momentum markets, which occasionally has happened lately in the crypto. But you'd be much better off at least attempting to do that than to try to catch a falling knife. In other words, a market when it's dropping. So I believe I showed this slide before. This was the hottest crypto back here. Remember the summer when crypto heated up? It was fantastic. The next day I was flipping out half and I had a free position left over. And I'm not sure what this buy is here, but you can see it, if it's a new buy, it didn't work. Now, recently we had this nice pullback, and it almost made it to the 30 EMA, and that's what I call the Landry light pullback. And for that, I like to use the 30 EMA, and this is all in the plug-in. And down here you have bars of Landry light. So you want at least 10 and ideally 20 or more to determine whether you're in a trend, and then you look for a pullback to the moving average. Now, I don't use this mechanically. I just look for a pullback in general, or a TKO, trend knockout, some of those patterns we talked about before. But anyway, that was the initial buy, and that one sort of failed miserably, but you know what? He who fights and runs away lives to fight another day. And I think that Saturday I have marked in here, I got back in, maybe Friday, because on a relative strength basis, it was one of the hottest cryptocurrencies at the time. I keep stopping myself short from calling them what we call them now, what a lot of people call them. Anyway, here's one I never heard of until a couple days ago, and I noticed that it was being carried by one of the brokerages I use, and it was going up. So I decided to buy it. I bought millions and millions and millions and millions of these things. You can see it's very cheap. It's probably completely bogus. I'm sure somebody's going to leave a comment below and say, that's totally bogus. That's a totally bogus coin. You know what? I don't care. If I can make money with something going up, then I don't care. That's my whole job. My whole job is to make money, and I guess part of my job is to, because I enjoy that part too, is to teach you how to make money too. And there's reward in there, in that. Obviously, I'll make a little money if you become a client, but I also get to see people make money, and that makes me feel good. Anyway, so I was able to flip it out the next day, and now I'm free rolling. This is a free position, so to speak. If I stop out, I don't care. If it keeps running, that's going to be fantastic. By the way, I was thinking about this right before we went live. The reason I've been doing really well in the crypto is because my account's relatively small there, And I'm just having a blast. I'm buying things that are going up, and I'm selling them when they start going down. And it's just a heck of a lot of fun. I'm very flippant in my trading, as I often talk about. You really have to be flippant. As Larry Williams once said, paraphrasing, in order to be a successful trader, you have to not care. The more you care, the worse you do. It's a little counterintuitive. And he went on to say that you have to be what psychologists call clinically dispassionate. Well, right now in Bitcoins, or I almost said the word, I almost slipped up. Altcoins, I could give a flip, okay? And I'm just having a blast trading them. And sometimes you can just buy them to go up and sell them to go down. If we have time, I'll get into the live charts here. If not, on Thursday, I'll do it in the weekly charts, I promise. For what it's worth, these are the coins I'm long. Most of these were bought on Saturday, a few on Sunday. The thing about these altcoins is they all tend to take off on Saturdays. I guess everybody's home from work and they trade them. So I come in usually Saturday morning fairly early. Not that early. Depends on how much I was served the night before. But I come in, have a big cup of coffee, and I'll spend a lot of time on these cryptos. I'll look at them all week, but Saturday morning is one of my favorite times to trade them. Everything in green on here, such as the SHIBB I just showed you, whatever that is, right? I think it's a takeoff on like a doggy coin. You know, it's bogus. It's all stupid, right? But who cares, right? They go up, buy them. They don't go up, don't buy them. Anyway, everything in green, I have hit the initial profit target on, and I'm free rolling, so to speak. And those are all free positions, so to speak. And hopefully, a word you should never use in this business, I know, but hopefully I'll be in those for a long time. So I want to shift gears a little bit and talk about the power of the plugin. And this is something that I talked a lot about last week in the week of charts. I know I'm kind of last week at band camping here. But I want to talk a little bit about market timing simplified. And in addition to that, I want to talk about staying on the right side of the trend. So just real quick, TFM 10% system, as I alluded to earlier, stopped out right before the market began to panic a bit about the pandemic. And then it took a while to trigger back in, and it triggered it at higher levels. If a market goes down and bottoms out for a while, the buy line is going to drop down, and you'll be getting it at much lower levels. So go in and look at like the bottom in 2002, 2003, which took a long time. You were getting in much earlier. Now, I do have daily signals I watch. This is the weekly chart, okay? So I will be seeing weekly triggers, and just like we're going to see some weekly triggers really soon with bow ties and things like that in the indices. But that was the last buy. In order for us to get a sell, the 50-week simple moving average, and by the way, if you want to plug in, like the video, and then you can get it for free, click right here, but like the video first. And if you don't like the video, go have no fun somewhere else. Anyway, you can see the 50 simple moving average is actually caught up to the buy line, okay? Sort of like they were back here. They're both pretty much in the same area. So any close below 40.63 would be an exit signal. So keep an eye on that level. Now, here's the deal. Getting in last July and getting out, hopefully not, but getting out this October, that's been a pretty good run. So Tarzan speak, good. Just when you thought we were done with Tarzan. Now, one thing I haven't talked a lot about lately is bow tie proper order. And it can be pretty powerful too. Proper order just means that the 10 simple is greater than the 20 exponential, and 20 exponential is greater than 30 exponential. Green is good, Tarzan speak, okay? Red is bad when it goes from, especially when it goes from uptrend proper order to downtrend proper order. Green is good. Yellow is cautious. Okay, be cautious. That means that the moving average is coming together and beginning to meander. But you can see that since last April, it's been mostly green, which Tarzan speak, good. Since then, and we've had a pretty good little run. But now we went from yellow and now we're red, meaning that the 10 is below the 20 and the 20 is below the 30, okay? So we need to keep an eye on that situation. So that's not good. Now, Landry Light, this kind of amazed me a few days back or a few weeks back when I plotted the Landry Light with a 30 EMA. And you can go all the way back to November, and I think we had one bar right there, if you squint your eyes, of downside Landry light. Maybe one possibly here. But for the most part, you could see that it's been green for a long, long time using a 30 EMA. Stay in the light is good. Which is amazing how something so simple can keep you on the right side of the market. Now, what I thought was kind of cool is when, I know you want to party with me, but what I thought was kind of cool was I applied the 50 simple moving average, which is going to be a little bit slower to catch up to price. But the advantage of that is that we didn't have any downside Landry light, also going way back to November with the 50 simple moving average. And now you can see we're starting to get a little bit of downside Landry light, about 6 bars in here. You can see we're well below that 50 moving average. So Landry light, in case you're just tuning in, means lows are greater than the moving average, we're uptrend, or a green down here. To the downside, it means the highs are less than the moving average. So again, we're starting to get some red in here. We're starting to get some red in here. Not the end of the world, but you might want to start paying attention. So once again, stay in the light. The light is good. At least it was good up until recently. For almost an entire year. That's pretty amazing. Nice green that entire ride up. So now we need to start paying attention. Now here's something that's really cool to me. And again, I know you probably want to party with me. You can go all the way back to last July, and we've had upside Landry light ever since. Notice all the green in here. 316 bars. Now, by the way, this does not count magnitude, okay? This only counts number of days, okay? And a lot of people, I've got some quizzes on the back end of the website in the members area, and a lot of people get confused on this. But this is just number of days, so we know how long we've been in this trend. Now, you don't want to necessarily exit the trend, but when you start getting up to 300 or so on a 20 simple moving average, you know you might be a little bit long in the tooth. A signal like this is going to be a little slow to catch up to the market. If you look at something like the TFM 10% system, you'll see that it caught up fairly quickly, especially when the market's getting ready to crash, like 1987 and some other times. But if you're using something much, much further away, like the 200-day moving average, it might not get you out in time. Well, that's my time for this week. If you need to reach me, DaveLandry.com. Again, next week I'll pick this up, and I promise we'll jump into the crypto. You only really want to be buying the cryptocurrencies when they're rallying, when you're in a momentum market. So if you pull up the ACP and sort them by percent change, and you've got a lot of green on top, a lot of big percentage gains, then those are the coins you want to be buying. Any other time, or even especially if they're rallying like that, keep an eye out for things like Landry light pullbacks. And again, I'll flesh those things out next week in the crypto segment. If you would like the slides again to this presentation, all the other presentations and PDFs and a bunch of stuff to keep you busy for a long time, get to know me first. Go to DaveLandry.com/StockCharts. If you have any questions, as usual, DaveLandry.com/contact. I want to thank everyone for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.